Let's welcome on board Kunj Bansal as well. Kunj, I don't know if you've got a chance to look at some of these result reactions, but especially from the likes of Arvind Fashions, even Trend for that matter, the numbers have been really strong and the stocks are reacting to those numbers.
Yeah, you are right. I haven't got time to look at these numbers that they have probably just come now. But yes, clearly a few things are happening in market. Is if we specifically talk about the result season, as always, some companies have delivered better than expectation. Some have delivered in line. Wherever we have seen better than expectation, market always rewards such companies, and so the same thing is happening. More importantly, what has happened in this quarter, if we try and analyze in general, is that more than the top line growth, there has been bottom line growth in most of the sectors and most of the companies. Obviously, that has been led by the softening raw material prices, leading to improvement in gross margin, which has converted into improvement in the EBITDA margin. So while the top line growth haven't been as much, the bottom line growth has certainly been there. The other important thing that has happened is that generally we talk with the sectoral breakup in market in terms of consumption versus investment and cyclical and things like that. Now, unfortunately, because of the softened rural demand or the demand being low in the middle income category and lower income category, the consumption sector itself has got broken into two parts: high end consumption and the lower end consumption, and which is where we are seeing big dichotomy. All the higher end consumption companies are continuing to report good numbers, in fact, good top line also, in addition to good bottom line. But it's the lower end consumption companies which is where we are seeing challenge. So obviously, because of the slowdown, they are certainly not reporting the top line growth, but bottom line growth they are still reporting. So I think that's a new phenomena within consumption that has happened.
That's absolutely a trend that we're seeing coming in the consumption space. But Kunal, one thing I want to see, the flashes on the screen, bottom of your screens were about Atul Auto a short while ago in terms of the numbers. We saw revenues at 153 crores, a growth there. Margins also have seen an expansion coming in. When you look at it in terms of the company's margins, EBITDA margins are at 11.5 versus 6% as well. So sharp uptick and sharp expansion in terms of margins, and that's why the sharp uptick that we're seeing in the stock price as of now as well. Kunal, as of now on the technicals and charts, how is this one looking like? Because we've already seen a very good run-up coming in for this one from around 6 months back, 360 levels, to today trading at 680 levels. What is the view on Atul Auto? How are the charts looking for this?
So the charts are very bullish for Atul Auto, and as you rightly mentioned, yes, from 360 levels when the rally started off, that was a exact retracement of the 200-day moving average. The stock moved up, I think, in a matter of 1 month from those 360 levels to 650 odd mark in the month of August, if I'm not wrong. And then for the last 2 or 3 months, the stock was consolidating around this 650 odd mark. So 650, 600, I think broadly was the range for Atul Auto. But the stock being high beta in nature, of course, you would probably expect that the gyrations and the range could be a lot more a tested range for the stock price. Today, the stock has confirmed a breakout, and in that process of the last 3-4 months of the rally consolidation, it's completed a bullish pennant formation, which I believe is a very strong combination for the stock price. This could probably indicate that the stock may be ready for another at least 80 points to 90 points on the up move from the 650 mark. So maybe closer to 730 to 740 levels is what we can expect as a target for the stock.
Sure, point taken. Kunj, what about the jewelers as a whole? Titan reported a good set of numbers. If you look at the stock of Kalyan Jewelers, it's up almost 150% this year. Senco Gold saw a bumper listing. From there, it's up around 70-80%. Is there some re-rating on the cards, or is it again related to the entire consumption theme that you were talking about earlier?
Yeah, so I would go back to the point that I said, that the consumption sector has got broken into two parts. One is the high end consumption and one is the lower end consumption. Clearly, we are seeing a marked slowdown in the lower end consumption, reflecting into the lack of growth in the top line of the lower end consumption companies. Let's say from the FMCG space is one such space. Consumer durables, lower end consumer durables are the other such space. For a moment, let me put two-wheeler demand also into that lower end consumption space. As against that, we have higher end consumption, which is where we are clearly seeing the demand, passenger vehicle, and which is where the jewelry, high end jewelry, will also come into. So that's one thing. Now within that, what happens is that obviously the market rewards the performance. So wherever the numbers are coming in good, irrespective of the previous performance, good or bad, the market is rewarding such sectors and such companies. Valuation, as we all know, in India continues to remain a challenge. It's a market which has been continuing to be net inflow market, whether on a global plus domestic put together, or whether only domestics put together and reducing the global from that, and whether it is in institutionals as well as non-institutional retail. So in a net inflow market, there will always be higher demand for stocks than the supply. Once the demand is higher, the valuation will keep going up, and we can keep thinking and arguing about the valuation, but that unfortunately doesn't work.
Labs, that also is seeing a bit of a turnaround coming in. Finally, we are seeing a pickup coming in this one as well. How is Jyoti Labs looking to you, Kunj?
So very frankly, I have not looked at the company, but as I said, I mean, it's the whole consumption broken into two segments thesis that seems to be playing out.
Okay, point taken. Let's take